Right. So this is just a quick video on the truth about Bitcoin's current malaise, essentially. And this is something I predicted entirely uh, about October, middle of October last year. Um, I have a friend who has had several Bitcoin from, fairly reasonable uh, a long time ago. Let's put it that way. He's done very well, and even with this massive decline, has still done very well. If he sold today, I'm sure he would be up maybe several thousand%. He was in very early and told me, along with another friend, to get in very early. Um, and it's just not in my investing style to mess around with things that, for me, I have no intrinsic value, um, or don't generate earnings or interest or anything like that. Um, Not that I'm saying other people shouldn't do that, because clearly it's worked out great for lots of people, and I'm not anti-Bitcoin per se. It just, if something doesn't make sense to me in my head, I can't get my head around it. I just can't pile money into it. And as well as that, the people that were recommending to me to invest in Bitcoin are substantially wealthier than I am. So, they might have 50, 100 grand they can chuck at something and not worry about it ever again. I do not come from that background. So, yeah, getting back to it. Um, Last year, when Walsh's name was first raised as a potential for the nomination for the Fed chair, I said very quickly to a friend of mine, Bitcoin was around 117K at the time. Perhaps, carefully, because he's quite religious about his attachment to Bitcoin. And I said to him, maybe you should think about selling. To which he said, obviously, no. Why would you? It's 117K. It's slightly off the highs, comparatively speaking. Um, but I think even with some basic technical analysis, there was clearly some bearish divergence on the charts. Nothing particularly in depth, but I think it was fairly obvious. There was going to be a pullback of some kind. And this was before I knew about these halving cycles, and even now I don't really know about them. I just keep an eye on Bitcoin because of what I'm about to say. So the reason I said maybe you should consider lowering your exposure or taking some profits, mainly, obviously the chart was one thing, but mainly it was to do with Warsh coming in. This is a lot of people's first market cycle, and certainly the first time I'd say most retail traders have been paying attention to a new Fed chair. We have Powell in place for quite a long time, and obviously a lot of retailers came into the market during before, slightly before COVID, uh, and so it's understandable that people don't necessarily understand the process of what the market does when a new Fed chair comes in. Um, just to stick on Walsh for a second, Walsh has made it clear, abundantly clear, for many years, um, with his actions and his deeds, that if he were to gain any control over the Fed, he would look to move back towards a number of things. The first being the Fed not, taking a much more passive role in the markets. So he doesn't believe it's the Fed's job to soothe the markets. Obviously he doesn't want to kind of damage them, but he just believes in a sort of old school pre-Alan Greenspan, RIP, by the way, pre-Alan Greenspan Fed role, um, which was taken further and further by Yellen and Powell. Um, So I have Indian neighbors, and they do like to talk loudly in public. Not just my neighbors. Um, and he wanted to go back to a more traditional Fed role in which the Fed didn't, brief everybody, didn't do things to pump the market, and simply just did their job within the remit that Congress provided to them, which is keeping inflation under control. And really, I think he sees the Fed's role as ensuring fiscal responsibility from the US government. Um, and obviously, the market knows this. They know wash inside out. He's been a leading economic figure now for the best part of nearly 2 decades. They know what he thinks. Um, so when his name came up as a rumor, it almost perfectly coincided with the drop in Bitcoin. Almost perfectly coincided with the drop in Bitcoin, in the same way that his nomination perfectly coincided with a drop in Bitcoin. And on, I think it was January the 31st, when he got nominated, when he was actually formally nominated, again another crash in Bitcoin. There's lots of things people have said about Saylor. I don't know whether it's a Ponzi scheme. I don't know whether he's a crook. I'd be honest. MSTR has never interested me. Bitcoin for the most part hasn't interested me apart from a liquidity indicator, and Saylor has never interested me. But people like to, they're looking for things to blame because they can't. If they admit the real reason for Bitcoin's drop, which I think a lot of people know. I don't think what I'm saying here is like secret, but if they admit the real reason for Bitcoin's drop, then they need to admit that Bitcoin isn't this inevitability, which I think people convince themselves. Once they got past sort of the 60,000 mark the first time, it was like, well, this is obviously going to a million. But this is the problem with speculative assets, commodity, because that's what it is. It's a commodity. It's not currency, and as despite Saylor's best attempts, it's not an equity. It's a commodity, an attempt, a very recent attempt at introducing a new store of wealth and a hedge against inflation. I imagine gold took thousands of years to become that. So the possibility that Bitcoin would also be the same within 15 to 20 years of its existence, or the beginning of its birth, sorry, always makes me laugh, because trust isn't given in the markets, it's earned. And nobody has the slightest idea as to whether Bitcoin can be trusted or not. And until the point it can be trusted, it therefore isn't a safe store of value or a safe hedge against inflation. As we've seen, Bitcoin has suffered the worst kind of inflation, which is devaluation against its primary comparator, which is the US dollar. It's down 50%. So therefore, that's the equivalent of inflation. It's down 50% in like 7 months. We would need to run at 50% inflation for 7 months for the dollar to go through a similar brutal devaluation. So Bitcoin is not, on the evidence of what we've seen since October, November, a hedge against inflation. Some people will say, well, gold loses its value. Well, yeah, but gold is still, way above where it was when it started its run. Bitcoin is back down to the same levels that it was at in, well, if you're watching this video, you probably know already. It's down to the same levels it was at in, goodness gracious, 2024. And, oh my goodness, there we go. It's down to its high in 2021. Right? That's not inflation hedge behavior. So anyway, this, regardless of what it is, I don't know whether it will be an inflation hedge. It might be the case that it's Gen Z, they're into more digital stuff. They might see it as more trustworthy than gold. Gold, physical things might be a foreign thing to them, and the digital generation might want a digital solution. So yeah. So anyway, let's talk about the future of this. So it was obvious that there was going to be a bit of a liquidity squeeze if Wash came in, right? So that automatically, I think it was a 7 trillion revaluation in January as a result of Wash's nomination. That's how seriously the market took his nomination. And now we're into really the meat and gravy of everything, because it's clear that we are probably going to go through some demand destruction in the next year or so, which means Walsh will get his way and he'll be able to cut interest rates. But Walsh will not just cut interest rates. Just be clear on this. It will not be a bonanza. Walsh will be able to, because there is some political capital he needs to spend to do it, Walsh will be able to cut interest rates, but the quid pro quo for him will be trimming the balance sheet. And balance sheet trimming is far, far worse. Okay, they should call it the Fed carry trade, really, with what Powell done with the expansion of the balance sheet under the Fed's balance sheet. And if that unwinds, then we're going to see some real big problems, because at the moment we're going up, the Fed's balance sheet is going up, but there will come a moment when Walsh decides to start turning the tap off, and we've seen it already. Liquidity growth is slowing. It's not declining. And if you look at how volatile the markets have been this year, this is all as a result of liquidity slowing. So we are getting more liquidity all the time, but it's slowing. So when we get into that QT environment, a quantitative tightening environment, which we will get into at some point on aggregate, so they'll drop the interest rates, the Fed funds rate, but then they'll begin to shrink the Fed's balance sheet. And we will be into a era, and I think we are into an era now of quantitative tightening, and this is an era that will probably last somewhere between 8 to 12 years. The bull market for me is officially over. We might reach new highs. We're on the NASDAQ or the S&P at some point again this year, but I think the bull market is over. And it takes me on to something else that Walsh said he was very keen on, which was the market going through genuine price discovery, which it's not been the last few years. You just, you put a pound or a dollar into a stock, it goes up. It's that simple. And obviously the only exception was the breakout of COVID and the 2022 minor bear market. But all you have to do is zoom out 24 months and that disappears. So that was not a proper bear market. And we haven't had, I'd argue, a real generational correction in approaching 20 years. Some would say 25, depending on how you define generational correction. So it's been very easy to make money, and there hasn't been much organic price discovery. It's been easy trading. Lots of people have made lots of money, and the Fed has accommodated that. The Fed has accommodated an fucking enormous wealth transfer from the middle class in particular to the rich in America, by allowing inflation to run riot for the most part, way above target, in order to support the stock market. And anyway, it's just been insane. So fundamentally, Bitcoin is the riskiest of risk assets. It is where you put your money. It's not a hedge yet. It's not a safe store of wealth yet. It is a speculative, but purely at the moment, purely speculative instrument. That's why the institutions have been adopting it, because they believe it has far, a fair amount to run. They can see it's got retail passion behind it, which, retail passion is great because it's easy money for the institutions. And whilst I don't believe institutions actively hunt retail money, if they see retail willing to chuck in, $250 billion a year into an asset that they sort of, hope and pray is going to work out a particular way, they will get involved as well, and they will suck the living life out of it. And that's what they've done with Bitcoin recently. Saylor, I would argue, is one of those people, although I do believe, judging by his SEC case in 2012, I'm not really sure I can say this, or I'm qualified to say this, but I do believe that he has some genuine passion for the asset. So the point being is, this really is just purely a liquidity issue with Bitcoin. Like I said, it's a speculative instrument. It always has been. It will remain so for the future. And so far as liquidity is tightening, the first places that the market will go to when they get margin called, or when they want funds for something else, or whether they see bond yields going up and they think, right, there's more value in that, the first place they will go is gold, because that became a speculative instrument. Or I suspect the crash is somewhat done with that. And the second place will be Bitcoin. And that's it. It doesn't say anything about how good Bitcoin is, how bad Bitcoin is. It's not people voting with their money or voting with their feet. Bitcoin has been turned into a religion, but the markets are not a religion. Okay, the markets are just cold hard facts and data. And so these institutions don't need to believe in Bitcoin to put their money into it. They just need to think that it might go up in value. And at the moment, they realize it's the least likely thing to go up in value in a sort of mostly risk off, a little bit risk on environment. And they're pulling their cash out of it, and people are getting a bit shaky, and it's selling off. And as a result, we'll see where it ends up at the end of this, once we get through sort of a full cycle of QT, or quantitative expansion slowing to a much greater extent. We will then see where it ends up and how much faith is retained in it from its sort of core supporters, or whether we see lots of them start to peel off and sell off as well. And what remains is a sort of niche asset, in the same way that some people have value in quartz. On the whole, could be quite valuable if you have a large enough amount of it, and lots of people are passionate enough about it that it retains its value if you want to make money through it. But your audience is never going to be massive. And it may be the case that Bitcoin ends up the same way, just a niche thing that lots of people are passionate about, that will never go to zero because of the amount of people that are passionate about it, but will be a market with very, very limited liquidity, because the people that went in and made their money in it are not going back into it again, because they've got the blockchain technology they need, and Bitcoin was just a sort of a bridge to that place. So that's it. That's why Bitcoin is losing its value. Nothing more, nothing less. It's liquidity. It's wash. It's an era with a slightly slower economy. It's companies getting jumpy about the amount of debt that's in AI that could potentially be lost. Companies getting jumpy about the amount of revenue that's in AI, or not in AI, as the case may be. It's more attractive yields in government bonds. It's the potential for we've already seen a slight amount of it unwind in the Japanese carry trade, because if Walsh brings rates down and the BOJ brings rates up, as I explained in another video, that also puts that carry trade under pressure. And whilst it can unwind violently, the reality is that if rates continue to creep up, it will unwind slowly, but unwind it will. And what people are going to sell, they're going to sell their riskiest assets, and Bitcoin is one of them. Although I'm not proposing for a second that I am aware of how much carry trade, cheap borrowed money is in Bitcoin, but I would suspect it's not insubstantial. And as the market becomes more illiquid, as people run for the door, obviously smaller amounts can make bigger differences. So for me, like I said, Bitcoin drop is just a liquidity issue, and it remains to be seen what Bitcoin even is. What even are you?